Breaking news out of Florida, top economist Robert Shiller does it again, sets the news headlines on fire as he came out and said home prices are historically very, very high. And if you could delay your purchase as a buyer, you really should. Now, his famed index, the Shiller Index, one of the leading home price tracking reports across the entire nation, the report came out and said that after the fall, lagging prices in Florida are back on fire. Today, I'm gonna take a deep dive, particularly in the two leading cities in the state of Florida, Miami and Tampa. I'm going to show you why these particular cities are super important. And by the end of this video, you are going to have a deep dive understanding of what is going on in Tampa, Miami in 2023, what you can expect in the fall, and will home prices go back into correction in the fall of 2023, just like they did in 2022. Many people don't know that Florida lost 10% in average home price in the fall of last year. And yes, as the economist Robert Shiller pointed out, we had home price go back on fire, but at the same time, we have all kinds of economic turmoil. We have interest rates on the rise going back towards 7% again. And we know all of that's bad for housing. My goal today is to give you a very deep understanding of exactly what to expect for the rest of the year if you're thinking of buying in Florida, investing here, or you own here already and want an inside perspective, because when I'm done, you're gonna know more than most real estate professionals about where this market of Florida is right now and what to expect coming into 2024. But as I've promised, I'm gonna give you a statewide overview of what the state's doing, and I'm gonna take a quick deep dive in both Tampa and Miami. I'm gonna break out the information at chapters below, just in case you don't wanna watch the entire video. But with that, let's get into the news. Award-winning and Yale economist Robert Shiller making headlines again as he released his most recent update in the news on home prices, and he, quote, said they are still very high. And he said, maybe if you have a good chance to delay your purchase, it might be a good time to do so. Constantly repeating a similar narrative over the last couple updates. He comes out and says this on the closing bell this past week. He goes on to say this: I would extrapolate the downturn somewhat. It's going to continue. He said, maybe if you have a good chance to delay, it might get a little cheaper in another 6 months. Further on, the article goes on to point out that the reason Shiller's warning this is he believes there's 6 months of declines left to come. And that basically, because there's a little bit of uncertainty, there's, it's very tough to kind of forecast long range. He's an economist and he's saying, look, I can't figure out what's going on in this marketplace. He goes on to say that it's easy to forecast the short run in the market, but it's much tougher in the long run. So he doesn't have good visibility. I think for an economist that love to plan to make sure everything is super in order, the easy thing for them to do is say, hey, look, step away from the market if you can help it, and wait. Let's take a look at this. Tampa Bay Times reported, based on Robert Shiller's index recently, about Miami and Tampa, and really, folks, the entire Southeast leading the way in home price increases. And folks, the headline at Tampa Bay Times this week, really headlining what the Shiller Index came out and said, which is a backdrop for those that don't know. The Shiller Index is really a leading tracker for all home prices throughout the US. It's tracking the major metro areas. It's been relied upon. And obviously there's a lot more places you can get data than when Robert Shiller probably started doing this. But over time, his was the gospel in terms of understanding what's going on with price increases throughout the US. Now, Miami and Tampa, no surprise, folks, tops the list. The article says Miami remained atop the list for the 8th consecutive month. It still, folks, has a 7.7% year-over-year increase, followed by Tampa with a 4.8% increase. And folks, this is not a surprise. You had the Southeast topping the list. You had the West losing value. Locations such as Seattle had 11-12% price loss. You had San Francisco, the same thing, around 11% of price loss. And you had the Southeast really kind of towing the line and still seeing gains regardless. But folks, the gains that are there represent a big time deceleration of home prices over what they were last year. So if you look at things on a trend line, it's just like a fast moving train just getting slower and slower. So yes, they're still seeing upside, but the pace of the upside is obviously not near the clip of the last 2.5 years. Folks, at the same time, we're seeing another very key article, which is very important for Florida because Florida is heavily pushed and promoted by investment purchase, second home purchasing. Redfin came out and released data that they've been tracking saying that investor home purchases fell a record 49% year over year in the first quarter. So the number of homes purchased by investors dramatically fell. It was the biggest leap that we have on record, which goes back to around the year 2000, which shows that there's a seismic shift in how many investors are in the market that feel there's value. And this isn't a surprise, folks. If you pull any graphs across any of the major metro areas, you can see that the cost of buying a house way higher than most markets than it is to rent. So investor comes in and their monthly payment to buy is $3,000 a month, but the rent coming in is only $2,500 a month. Breaks the deal. The other reason you're going to see that the investors have left the market is particularly because all the data throughout Florida, Miami, Tampa, all these marketplaces, as we came into the beginning of this year, interest rates came down. They peaked in the end of the fall season. They dropped really low, and buyers came out of the woodwork and bought like crazy. So in Florida, I'm going to show you the stats. In fact, let's move on. I want to show you this. Look at closed sales in Florida. They peaked in the middle of last year, and this is a span of time going back to April of 2021. So this is a 2-year graph. But you can see that over time, closed sales in Florida dramatically got lower and lower and lower. Now, at the same time, let's look at inventory, folks. Inventory coming into the end of last year, look what happened. It doubled. Now, this made a lot of headlines because folks were reading stories saying that Florida's inventory is up 120% or whatever it is. Yes, it was because it was at 28,000 units when it's usually around 100,000 units, 80, 90, 100,000 units on a given year. At least the 4 or 5 years preceding the pandemic, it dips and then it doubles, right? So here's the deal, folks. Notice as inventory climbed all the way up in late last year, going into the year, you have this narrative right now. Look, you can see what happened with closed sales. Did closed sales go up as inventory hit the market, or did it drop? You can see it fell. You'd say, Jared, what is your point? The point is there's this constant narrative, even leading NAR, National Association of Realtors economist Lawrence Yun, you'll hear him say frequently, well, sales are down because inventory's low. And this actually blasts the narrative, is that inventory leaped over 100%. It actually went just a little south of a normal year in terms of how many homes were sitting on the market. And at the same time, buyers said, I'm out. And a lot of that was the cash buyer pullback, particularly in Florida. There's some markets in Florida that nearly 50, 60% of all sales are done all in cash. So cash involvement, particularly in Florida, is very important. But this is what I want to show you right now, okay? Because, this particular volume of closed sales, we're seeing it kind of pick back up. But look at the history of closed sales month over month. Look at it versus the year prior, okay? This last month, April, most recent data we have, down 17%. The month before that, down 15%, down 20%, down 30%. If you look in the fall, there was a huge gap of people just bailed out on the marketplace, didn't buy homes. So the reality is everybody's focused on supply. There's not any homes for people to purchase. But the reality is when the interest rates go in flux, or there's market confusion, there's a little bit of concerns where people are just like, I don't want to be in this market. I don't know what's going on. This whole Robert Shiller narrative of if you can wait, that is taking place in the state of Florida. There's also outside factors, which everybody's going to tell me in the comments about insurance. And it's a fact. I had a story this week of someone who just a $700,000 house in Florida, which is nothing remarkable these days. But the reality is this is an Orlando home that was paying $3,000 to $4,000 a year in insurance premium for the house. Got a notice from a mainstream national brand that said, hey, your insurance is now $14,000 a year. All of you people from the north, okay? Because I've been saying, look, migration patterns shift. In Florida, it's no different. Migration into Florida, we can see it, we can track it, we know where it's coming from. It's coming from New York, it's coming from Chicago, Connecticut, it's coming from the north. All that is where the inbound money is coming from, and interest in paying more for our houses because the locals can't afford it, okay? We already know local income, people that live here already are paying to buy a house here 45, 50, 55% of their income to support a debt service to buy a house here. Renting is cheaper. Renting becomes the default option because the prices of homes get pushed up too fast and too hot, And then all of a sudden, that's when you see this trend suffer. Let's take a look at what happened to price, folks. You have right here the average graph for Florida pricing. Look at this. It peaked in the middle of last year. Most markets did. The average price for the state of Florida was $602,000. When you saw that runoff of buyers just bailing out of the market, look where it went. It went down to 530 grand average price after it was at 60 or over $600,000, which represents around a 10% pullback. Now, folks, what we're seeing now in Florida is this: prices coming back up, prices actually rising. So all of you people that get super panic stricken and triggered by my thumbnails, I'm just trying to get you into the video for great content, okay? Don't get upset. We have to use salacious things, but the reality is right now you have price climbing in Florida for the second kind of seasonal run up after the boom. It's like, here it goes again. Don't get me wrong, folks. It's still 5% down from the leading number. And I also, when you look at these graphs, you can see that this is inventory, by the way, active inventory. You cannot get this graph anywhere. Not even, I don't even think Reventure Consulting can get this graph. This is the active inventory from the Florida Association of Realtors feed that only realtors can get. Look at this, folks. You can see that it is a decline motion right now, month after month. The most recent number we have is 58,000 homes. So let me help you understand something. You'd say, Jared, I'm a bystander. I'm on the outside. I can't afford housing in Florida. Can you tell me what it takes for us to see this decline again? When will this tip again? Well, I'm going to tell you precisely. This is what it took to drop the price here. The easiest way to see the softness in the market, what created a condition for homes in Florida to lose 10%, I'm going to tell you with precision right now. You can easily check the marketplace's what's called months of supply. It means the time frame it takes to sell off all the homes in the marketplace at a given time will give you a snapshot of how soft the market was for prices to drop. Now, in this case, the marketplace was around 4.6 months of supply. So if you take how many homes were on the market and how fast it takes to sell them, it was a 4.6 month of supply in the fall of last year, meaning that there wasn't a ton of homes. I mean, everybody wants to say, inventory was super high. There was like Florida had a 100% increase. Wasn't a lot of homes. Look, it went up to about 70,000 units on the market for sale. In the history of time, it usually hovers around 90,000. So it still was low, but it was getting up there in the face of actual low sell-off. So you had towards the end of this November, this end of this peak run of inventory climbing, at the same time, buyers were coming out of the market. Look at this. 23,000 homes sold, 20,000 homes sold, then 17,000 homes sold, then 14,000 homes. So you can see in a 2-year span of time, like the volume of buyers just being involved in the marketplace for the entire state was incredibly low. Okay, so this is a very, very low number for the entire state. And at the same time, if you have 60, 70,000 homes, it's going to take 4 to 5 months to sell through all that at the pace that they're selling. Now, where are we at now? Right now, just in single family homes in Florida, we went from a 4.5 month supply, which, to give you a kind of chart of reality of what this means, because people are like, what is a 4.5 month? The lower the number, the faster all the homes sell and disappear. Okay. When there's very little for sale, you have dogfighting, you have multiple offers is what I mean to say. You have, just a very tight contentious market when there's only 2 months of supply or 1 month of supply, meaning 1 month of just homes selling at the current rate they are selling every month. If they all were gone, if nobody listed another house, that's a very fast supply market. If there's months of supply, meaning if nobody else lists more houses, and people do list houses, right? So they're just dumping more on top. But if everybody stopped listing and it takes 5 or 6 months to get through all the inventory, that's a lot of houses to choose from. In the historic, people used to call 6 months a balanced market. I would not say that's the case. I think in modern times, 4 to 6 months is considered balanced, meaning the buyers don't have all the control and the sellers don't. There's plenty to choose from, but there's not too much. When you get 6 months to a year of inventory, that's when you are very buyer favored. That's what happened in '08 when you had the GFC. prices slammed down. But inventory, for that to happen, inventory went way, way high. I mean, I could show you market after market. If Miami usually has 10,000 homes on it, it was probably at 40 or 50,000 homes. You know, it just was way, way high. Those of you that are way ahead of this, forgive me for the long explanation, but here's the reality right now. 23,300 homes sold last month against an inventory of 58,000 homes. You get a little bit more than 2 months supply, folks. Right now, it's incredibly tight. So you have Florida single family homes. It's tough. It's a tight market. There's plenty of buyers moving right now. It is where it is. It's a spring summer market. This is the time when all this stuff seasonally starts to really shake up. And here we are. Price is on the move. One of the things that I really, really want to watch is if we are going to see what Robert Shiller says is somewhat of a pullback on prices in a real terms, like we're going to see it really kind of come back. I think the gateway in seeing that happen is going to be watching Miami. And I'm going to show you why. Let's jump into the data. Some of you may have seen this chart before. The reason I like watching it's because you really couldn't tell where people move from, but somebody figured out a long time ago that if you can track where the tax money comes from, because we already have to pay taxes, we can tell where the tax money was being paid before. And then we can tell, you know, if people move to Miami, where their tax base came from. So the thing we're seeing with Florida folks that's a very interesting anomaly is you have a couple landing spots, particularly Tampa and Miami, meaning all this money is coming in from outside, driving up the prices of those markets. And then the locals in those markets are moving throughout the state. So track this with me. Locals can't afford it. Outsiders move into the area, and then all of a sudden the people that were originally locals in those particular counties that the outsiders move from, I'm talking about particularly northerners, obviously New York City, Chicago always seems to set records in these areas. They move in and then the locals move out. Okay, now where do the locals go? They go to outer areas, they go to Orlando, they go to Jacksonville. The funny thing is a lot of the tax base coming into the Orlando area, Central Florida, and Jacksonville area is already inside the state. It's not coming from New York City. Now there is a lot of that moving there too, but not the majority share. So if you watch Florida, a very interesting phenomenon that we're going to see is this, folks. This is a pivotal point I want you to understand, that the prices alone are driven by the outside world. Okay, prices in Florida are driven by, and again, I know people are sitting here watching the video saying, hey, I'm from Brazil, man, we're pumping these numbers up too. You know, we're coming from South America, we're spending money. But I'm telling you, all the money that is coming into Florida was driving up home prices beyond what the locals can afford is money from the outside. Okay, then once Miami and Tampa's house prices gets elevated, the people that were living in those areas sold their houses at record highs. Then they move their equity into another marketplace, which is trailing behind in price, but not too far. You get me, okay? So one of my adages I think will be is to watch Miami and Tampa, particularly as Miami goes, so goes the state of Florida. I'm going to keep saying that, but that is, I think, going to be the reality of any type of cycling in this market. Before I jump into Tampa, though, let me show you one last thing. Look at this, folks. The percentage of sales in Florida that are all cash. Now, this is a 10, 11-year chart I have here on the screen. You can see that we're hovering around 37.8%, around 40% of all sales in the state of Florida for all property types coming from cash money. And it's not really dropping. All right, folks, let's start with Tampa. We're going to go to the Tampa Clearwater. This is the entire metro area for Tampa, huge cross section. Encompassing even St. Pete and all the surroundings area. I think this might even include Lakeland or maybe just outside of it, but this is a massive area. Look at price, folks. You can see here that price peaked in Tampa along the lines about a month later than the actual state of Florida did. But Tampa's price peaked out at $520,000. You remember the state of Florida at large was $600,000 average. I would say it bottomed at about $465,000, so it lost about $60,000 on down. So actually about $45,000. So maybe just inside of 10%. So kind of performed right around where the state of Florida is, maybe a little better. And then it's back to $499,000. So it's maybe 4 to 5% off its peak. And obviously it's on a price trend to climb. Let's look at the marketplace health. You can see closed sales. I've got a graph here going back to 2016. You can see that closed sales kind of hover around 4,000 units. And you can see that really kind of pacing the end of 2022. This is a major, major shift. So it went well off of its norms. You can see if you go down here that much like the state of Florida, particularly January going back into the fall, you had months where it was, you know, the volume of sales was off 37%, which is what led to price correction. Buyer demand dropped. Buyers being in the market wanting to buy homes affected that. So right now, as of last month, there were 3,500 homes that actually closed. Let's take a look. Now, I'm looking at single family homes. The reason I'm pulling just single family homes, particularly in Florida and particularly in Tampa, is because it by and large represents the greater economy. There's not a huge number of condos here. It's maybe another 20% of sales, but I really want to focus on housing. Miami will not be the case. I actually throw the condos in because Miami's a huge number of condo sales. But take a look at this. We had inventory falling off a cliff, folks. 3,500 homes sold in a single month against approximately 6,000 homes in active supply, folks. Folks, Tampa has around 1.7 months of supply, typifies a red hot market. So right now, sellers having no trouble at all, and we're gonna see how this hangs through summer. As a point of comparison, folks, back here in November, when all the inventory started to pile up throughout the state of Florida, it peaked as well in Tampa, at least for this season, and it represented a little over 3 months of supply. So even in the November season, it was still a little bit of a tight market, and the marketplace moving towards 3 to 4 months of supply. It's actually mind-boggling to me that this market actually saw a 9% shift in pricing with a little more than 3 months on the market, folks. Think about that. 3 months of supply. It means all homes are sold in 3 months. That's the velocity of the market because supply was still historically low, but sales were dropping. Buyers were backing away. Sellers were reducing prices. So you had a pretty big pullback in the average price alone, just with 3 to 4 months of supply. The marketplace doesn't have to shift. These dynamics don't have to shift a whole lot, folks. If you see a couple months down the road in Tampa and Miami and you see the actual closed sale volume start to dip again, inventory sweeps higher pretty fast. We can see it was a 4 or 5 month trend after the summer of last year. And all it took 3 to 4 months of supply in Florida to see very dramatic. This is the thing. When everybody's getting frustrated with price, it doesn't take a massive swing in the market just based on the data. We can see it doesn't take a huge dramatic shift. Under the right circumstances, when you get 4 to 5 months of supply in the market, the price can actually dramatically shift pretty quick. But this slingshot on the way back is very interesting. Folks, look at this. This is Tampa Clearwater, where I want to see exactly how cash sales are impacting these markets. This is actually pretty dramatic shift from the peak. So you had Tampa kind of tailing off up to around 33%. You had a month where they had 33.3% all closed sales. 1 out of 3 was actually a cash sale, which isn't very far from the norm. Most marketplaces, you're going to see 1 in 3. That's very common. 2/3 of the people borrowing the money. But look at this, folks. Cash sales are back down. Less than 1 in 4 sales right now in the Tampa marketplace. Cash buyers are saying, see ya. And it's not like people are opting to keep their money in the bank just because they can borrow money at great terms. I mean, as this time frame is passing, by comparison of recent history, I should add. All right, folks, let's take a pass by Miami. Now, Miami is interesting right now. You had a peak in June of $755,000 for the average price point in that market. And by the way, I've got all property types here. Most of the data I've shown you through Florida and through Tampa included just single family homes because it's not too much, just because it's more indicative of the markets there. But with Miami, you've got to have condos, townhomes included because it's such a high percentage of sell-off here. But look at this, folks, $755,000. The market tripped all the way down to $619,000. You had average price kind of really come down mid sixes. You don't really want to call the worst month on record the month, because you can kind of see it kind of just found a balance here, 630, 640. But that's a pretty big shift from the peak out of $750,000. So you had Miami kind of see a correction for a 4 month span of time where prices really jumped down like 12, 13%. But you saw that value dip super fast. Look at how fast the market shifted in Miami. We have to really maybe take a closer look at June to August because this is a 2 month span of time, folks. And it literally just fell off a cliff, which, what does it take to push values to $700,000. I mean, you've got a lot of $1 million home sales in Miami. Luxury market probably tanked literally overnight in Miami. It'd be interesting to see how much cash buyer activity diminished with this time span because most of the markets, when you look at this span of the last fall, it stair stepped down. You remember, you know what I'm saying? It ticked here and then it ticked here and then it ticked here. It stepped. Miami went straight vertical, where average price fell straight back down, and then it hovered on a much lower basis. And again, a lot of this, folks, is that the entry market stayed active in Miami. I mean, if we did some other data pulls, I'm sure if we looked at things like sold dollar per square foot or pending dollar per square foot, I bet you that fell off a cliff too, because much of what was left to sell was basically those entry buyers, those mid-range buyers that had been blocked out for the last 2.5 years. Now they're getting back in the marketplace. And at the same time now, everybody's kind of back to all hands on deck. Price now in Miami is getting close to 694,000. Let's look at closings and inventory levels right now, because this is super important. You can see in June, closed sales did slam down, okay? So if you look, let's look at year over year. Wow, look at this, folks. Year over year, huge activity change even now. This is something that is interesting. As Miami goes, so goes the state of Florida, folks. Look at these numbers, percentage change. Now, we have to take into account inventory here in a second, because there's that old adage, does anybody have anything to buy? But these numbers are off, folks. Look at the percentage change. No marketplace, none of the main highline markets through the Florida marketplaces are seeing 28, 30% drop in closed sale volume at this point in the year. We're going into spring. We're going into moving season. And these numbers are off big. Look at January. January was off by 41%. December, 43%. These numbers were bigger, as you know, than the state averages, and they're bigger drop-offs by a long shot, bigger than state averages, but they're bigger than Tampa. So something's happening in Miami. Now, the desirable properties are obviously still selling, and it's obviously replenishing the average price. But take a look at inventory, folks. Inventory climbed off the bottom. It was at 14,000 units. Let me make sure I got everything in here. Yes, all property types. 14,000 units was the bottom, folks. And most of the time, Miami hovers around 45,000 units to 50,000 units, okay? So it went from 14, 15,000. It peaked coming into November like everybody else. It went high as it would go. And then November, there started to be a little bit more sell-off. But it got up to 26,000 units, and now it's back down to 24. So it's not really that low. Folks, the descent of inventory, yes, it's declining in Miami again, but Miami's numbers are not trending. You saw it. You saw Tampa. You saw state of Florida numbers. They're going like this. The trajectory of the drop in inventory coming into moving season and that absorption, the sell down, Miami's stagnant, folks. It's not changing. It's not shifting down because those close numbers are way, way off. And again, this kind of kicks it in the seat of the pants. Everybody says, hey, you know what? There's the sales are down because there's no inventory to choose from. Well, inventory doubled almost. So you're at double the bottom. It's just you don't have double the buying power. You don't have the buyers feasting the market like they were in the last 2.5 years, particularly in this particular part of the country. Take a look at cash buying activity. Remember we saw that big dip in the summer? Look what happened to the cash buyers all at once. You could see the cash drop kind of fell in tandem with price. You remember the average price dip? I'll pull it up here on the screen one more time. You can see it fell just straight vertical. Leads me to believe too, when you got Miami kind of peaking, where some of these times it's actually above 1 out of 2 sales, like nearly half of all transactions in this marketplace seeing all cash for buying. But you can see over the last 3 months that cash buying is down. Cash buying is down. Another important point to make on this particular graph is look at the last 3 months. These represent year-over-year declines, even though they're massive numbers. It's super incredible to see this particular marketplace is seeing 44 to 46% over the last 3 months of all buying activity coming from cash buyers in the marketplace. But that's the update for today. I want to tell you, if you are curious about insurance issues in Florida, I'm going to drop down 2 very popular videos that help walk you through what DeSantis has been saying about insurance recently, and also what got us into this debacle in the first place. If you're curious about other data points in the state of Florida, such as how the oceanfront marketplace is doing, or key markets like Jacksonville, Orlando, Naples, all those are going to be found in different videos throughout the channel. So if you are interested in Florida real estate and deep dives in the data here, definitely make sure you hit that alarm bell to make sure you don't miss a video drop on this channel. And if you listen this far, thank you so much. give the video a like, and drop in the comments and leave a comment of any kind. Tell me what you think is going to happen in the marketplace. If you've got a marketplace you want to update on, leave me a comment on that. And if all else, just tell me, hey, thanks for making the video. It would mean a ton to me for you to do that. We'll talk to you on the next one.